As we reported earlier this hour, bank industry groups filing a lawsuit today against the Federal Reserve over the stress test process. Let's bring in Gene Scalia, partner at Gibson Dunn and one of the attorneys representing the plaintiffs in this lawsuit. He is also former labor secretary under President Trump. Gene, thank you very much for being here on this important day. First of all, I just want to ask you, what is it that you're hoping to accomplish with this lawsuit?
Well, Leslie, first, thank you. Good to be with you. And this lawsuit aims to improve the stress tests that are used annually to determine the capital that banks need to hold to maintain their safety and soundness. My clients are not opposed to stress tests. They support stress tests. They conduct their own stress tests internally. What they are very concerned about is both the process by which stress tests are developed and applied by the Fed right now, and also the results, which are random, arbitrary, and ultimately bad for the U.S. economy as a whole, because they're forcing banks, we think, to hold a lot more capital than is warranted. And so what we'd like to see is a new rulemaking process where the tests are vetted, where the public can see the stress tests, comment on the models that are used, and we can be more confident in the program that we have going forward.
But the Fed came out just yesterday and said that they were open to making the process more transparent. So why file a lawsuit? Why not go into negotiations with the Fed and kind of fix the process as you see fit from there? It seems like you're on the same page.
I think it is good news that it's widely recognized that the current process does need to be improved. Ordinarily, when the federal government makes rules, it, of course, has to tell the public what the rules and standards are, so you know what you're being judged by. And also, in rulemakings, you've got an obligation to let the public know what you propose. The public then comes back, gives feedback, suggests improvement, and those get incorporated into the final rule. You may recall when the Fed and other bank regulators proposed new Basel capital rules a little more than a year ago, there was a lot of public comment which said, wow, those models are unrealistic. They're too onerous. They can be improved. So it's good news that the Fed sees some of these problems, at least with the process. My clients intend to work cooperatively with the Fed to bring those changes about. At the same time, we were running up against a statute of limitations. My clients have been asking for years to see reforms in this system. Haven't happened. And so the limitations period runs in February of next year, and they concluded that in order to preserve their legal rights while they participate in this new process, the chair announced that it was time to go into court and bring this case.
Gene, it's Dom. I'd like to tap your unique insight here. You were a member of the cabinet for the Trump 1.0 administration, and I wonder, because the bank stocks have seen a remarkable run this year, largely due in part to the fact that there's a regulatory, at least relief trade happening. As you look and forecast for what the bank industry will look like in Trump 2.0, do you feel as though a more loose regulatory regime will be in play, and will it ultimately help the banking industry?
I think what we're hoping for is, first of all, my clients want bank safety and soundness. They want stress tests. We all want that. That's best for our economy. But, Dom, you're right. There has been too much regulation in the last 4 years. I think many feel that way. And the point is, it doesn't just impose costs on the banks. By the way, potentially tens of billions of dollars to a single bank in random variations in the stress test from year to year. But it's not just burdens on them. It's burdens on the entire economy. It's burdens on the people who depend on bank loans, who depend on bank intermediation. So the hope is that we'll have a more transparent process, a more rational process, and with those things, a process that's less burdensome, not just on banks, but on our economy.